Global trade, a foundational pillar of the world economy, faces a transformative period ahead. The COVID-19 pandemic catalyzed a shift from long-standing globalization trends by exposing vulnerabilities in international supply chains and the collapse of just-in-time delivery networks. As geopolitical shifts and technological advancements rapidly alter the landscape, Dubai's DMCC probes the dynamics that will shape the next decade of global commerce. Here are some of the key findings. Open conflicts in Europe and the Middle East, the rise of BRICS 11, and trade tensions between the US and China are reshaping trade alliances and routes. The world order is causing supply shortages, rerouting cargo, and adding costs to consumers. The implications of these shifts are profound, as trade policies and conflicts redraw economic maps in real time. And half of the world's population are going to the polls in some 80 elections in 2024, poised to introduce new waves of nationalism and protectionism. As a result, we are witnessing a fragmentation not previously seen in modern times. A pronounced trend towards regionalization is emerging, where countries are forming new economic blocs and trade corridors to safeguard against global uncertainties. Competition will grow between regions, as in the case of the US and China, around the production of silicon chips and in the race for supremacy in environmental goods and technologies. The supply of commodities and minerals will become increasingly more strategic and sensitive, further driving regionalization. The increase in friendshoring, the movement of operation to allies, aided by regional multilateral agreements, will strengthen inter-regional trading hubs in Asia and North America and see the rise of economies that can offer alternative sources of production to China. Countries like Vietnam and Mexico that can produce similar products are likely to see increased trade as a result. Vietnam, for instance, has emerged as a significant manufacturing and export hub, especially in electronics. Hubs like Dubai will grow their role as trade connectors, with proximity to East and West. Digital transformation is revolutionizing trade, with e-commerce sales projected to hit $8 trillion by 2027. Representing 41% of total global retail sales. As global trade routes are being decoupled and reconfigured, digitalization will continue to increase, with supply chain visibility and traceability as main priorities. And while automation and robotics have further digitalized supply chains, the most seismic development is the dawn of AI. AI alone is expected to contribute approximately $15 trillion to the global economy for 2030. However, the adoption of these technologies faces significant hurdles, including the lack of a unified global regulatory framework for data privacy and AI deployment. In an increasingly polarized world, these regulatory discrepancies pose one of the greatest challenges to leveraging digital technologies on a global scale. Beyond AI, semiconductors are poised to be the front line in the drive for technological supremacy. The emerging chip war between China and the United States will compound trade tensions. As digital platforms continue to grow, issues like cybersecurity and data sovereignty are coming to the fore, requiring robust international cooperation to ensure safe and secure digital trade. The role of major trade hubs, such as Dubai, is also evolving. These hubs are increasingly acting as critical connectors between East and West, facilitating not just the flow of goods, but also of data and technology. For governments, the central focus must remain the provision of appropriate and flexible regulatory frameworks for technology that balance innovation, consumer protection, and trade facilitation. Trade finance is the backbone of international commerce, supporting between 80 to 90% of global trade. However, the sector is currently facing a record finance gap of $2.5 trillion, a gap likely to widen despite increased adoption of solutions such as fintech and multilateral development bank funding. This gap is particularly pronounced in emerging markets. The estimated value of unmet demand for trade finance in Africa and developing Asia is $120 billion and $700 billion, respectively. Innovative financial technologies, such as fintech and blockchain, offer promising solutions to improve transaction efficiency and expand access to credit. Yet, the full potential of these technologies remains largely untapped, hindered by regulatory barriers and slow adoption rates. Every year, some 4 billion documents are created to support global trade. Each cross-border transaction requires up to 36 documents. Less than 1.5% are digitalized. In short, the opportunities for improvement are vast. Sustainability has become a central focus in global trade discussions, particularly following the commitments made at COP28 in Dubai. There, 130 governments agreed to significantly boost the world's renewable energy capacity and improve energy efficiency. The urgency will transform global trade through creating new markets for renewable energy and related technologies. Some countries will emerge as dominant global suppliers. China, for example, produces 70% of the world's graphite, a key component in solar panels and electric vehicle batteries. For some countries with both high fossil fuel capacity and renewable energy potential, such as the UAE and Saudi Arabia, the rise in demand for renewables could help offset the reduction in oil exports. Consumer preferences are also shifting towards locally sourced products driven by environmental concerns and the impact of global supply chain emissions. Furthermore, the implementation of carbon pricing and emissions trading systems is beginning to influence trade patterns as companies seek greener production methods to mitigate costs associated with high carbon footprints. The future of global trade is being shaped by a confluence of factors: geopolitical reconfigurations, technological innovations, and a strong shift towards sustainability. This new era, while fraught with challenges, also presents unprecedented opportunities for growth and innovation. Businesses and economies that can adapt to these changes, leveraging new technologies and forming strategic alliances, will be best positioned to thrive. The next decade will likely not witness a decrease in trade volumes, but rather a strategic evolution in how and where trade occurs. Embracing agility and foresight, stakeholders at all levels can harness the potential of this new global trade landscape. The future of trade will always find the path of least resistance, even as it's being decoupled and reconfigured.